All right, tax pros, business owners, listen up. The 2025 tax season is officially upon us, and you know every single deadline counts. Today, we're going to break down all the key dates you absolutely positively cannot afford to miss. Let's make sure this season is a huge win for you and your clients. It's that time of year again, right? The big question? Are you ready for the tax gauntlet? I mean, it can feel like a marathon, a real test of endurance. But don't worry, think of this as your personal map to get through it all successfully. And let's be real, the stakes couldn't be higher. Missing a deadline isn't just some small oopsie, it's a fast track to some seriously costly penalties, mounting interest, and a whole lot of stress for you and your clients. The only way to win this game is to stay ahead of it. So, let's dive right in. First up, Act 1, the setup. This is all about getting oriented, marking the official start of the season, and locking in those first few critical dates on your calendar. And we're off. The official starting gun for the tax season went off on January 27, 2025. That's the day the IRS flipped the switch and started accepting and processing all those 2024 tax year returns. So, by now, you should be well into your prep. You know, January really is the month that sets the tone for everything. First, you've got that final estimated tax payment for 2024 due on the 15th. Then, you have the big one on the 31st, getting all those W-2s and 1099s out the door. Hitting these marks on time is absolutely non-negotiable. All right, now we're heading into what I call the gauntlet. This is the part of the season that gets really intense, where those major spring deadlines just start coming at you one right after another. So, the first big number you need to burn into your brain is this one, 17. What's so special about the 17th? Well, in the tax world, this particular day in March is a really big deal. March 17th. This is your first major hurdle. It's the big filing deadline for all partnerships and S corporations. And don't forget, this also covers any multi-member LLCs that are taxed like partnerships. Now, if you need more time, the 17th is also your last chance to file for that 6-month extension, which will push your final due date out to September 15th. And now, for probably the most famous, or maybe infamous, number in the entire world of taxes, 15. There's really no escaping this one. Pretty much everyone knows what's coming next. Yep, you guessed it. April 15th. This is the big kahuna, tax day. This is the deadline for individuals, C Corps, sole proprietors, and of course, single-member LLCs. And just like the March deadline, you can file for an extension, which gives you until October 15th. But, and this is a huge but, there's a really important catch. This right here, this is probably the single most important thing to remember about extensions. It's the most common and, frankly, the most costly mistake people make. An extension gives you more time to file your paperwork. It does not give you more time to pay the taxes you owe. That payment is still due on April 15th, no matter what. Okay, so we've covered the main deadlines. Now, let's wade into Act 3, the labyrinth. This is where we get into some of the trickier stuff, especially when it comes to different business structures and keeping up with those all-important quarterly payments. You know, when it comes to LLCs, it's definitely not a one-size-fits-all situation. The deadline you need to hit completely depends on how that LLC is taxed. A single-member LLC, they're on the April 15th schedule. But a multi-member LLC or one that's elected to be an S Corp, their deadline is back on March 17th. And if it's treated as a C Corp, you're back to April 15th. This is exactly why confirming that entity classification early on is so important. And hey, for all of you making those estimated tax payments, here's your calendar for 2025. It's a rhythm you gotta get used to. April 15th, then June 16th, and September 15th for the first 3 quarters of the year. Seriously, staying on top of these payments is the best way to dodge a nasty surprise from underpayment penalties down the road. Okay, so what's the big deal if you miss a deadline? Well, in Act 4, we're talking about the stakes. Because sometimes understanding the real financial cost is the best motivation there is to stay organized. First, you've got the failure to file penalty, And this one is a real killer. It's 5% of the unpaid tax for each month your return is late. It can cap out at a whopping 25%. And believe me, it's almost always way bigger than the penalty for not paying.
Now compared to that, the failure to pay penalty seems a little smaller, at just 0.5% per month. But that adds up over time too. If both penalties happen to apply in the same month, the IRS makes some adjustments, but either way, it's money going out the door that you and your clients would much rather keep.
So, you're probably asking, how do I avoid getting hit with all these penalties? Well, let me introduce you to your new best friend, the Safe Harbor Rule. It's simple. As long as you pay at least 100% of the tax from last year's return, you're generally safe. Now that number does jump to 110% if your client's AGI is over $150,000. This is a crucial strategy to communicate.
All right, that brings us to the home stretch. Act 5, the master plan. We've talked about the dates, the rules, the dangers. Now let's actually put it all together into a solid, actionable game plan.
So here's a super simple but really effective workflow to guide you through. In January, it's all about closing out the prior year. February is for getting your hands dirty with prep work and figuring out which clients might need an extension. March is dedicated to that first big wave of business returns. And then April is the final sprint for individuals and C-Corps, making sure every last return and payment is submitted. So, as we wrap this up, I'll leave you with this one question to think about as you gear up. Is your calendar your most valuable tool this season? Because proactive planning isn't just about dodging penalties. It's about being in control, it's about managing client expectations, and it's about making this whole season way more manageable and, frankly, more profitable for everyone.